Hi, I'm Greg Wiebe, Canadian Managing Partner for Tax for KPMG. On March 22nd, Finance Minister Flaherty is going to release the 2011 budget. And there are a number of things that I would like to personally see to help improve Canada's competitiveness and make the income tax system work better for Canadians and Canadian business. Here's my wish list. First of all, let's look at something that will help Canada's competitiveness. The federal government has been on a journey for a number of years now trying to reduce the federal income tax rate as it relates to corporations down to 15%. The provinces are also on that same journey, trying to reduce their effective corporate income tax rates to 10%. On a combined basis, that means that within a couple of years, Canada's corporate income tax rate will be 25%. Why is that important? A couple of reasons. First of all, the OECD average right now is just slightly above 25%, and rates are declining. For us to be competitive, we have to be right in that pact. And if you compare ourselves to the other G7 countries, 25% corporate income tax rate is very, very competitive. It helps make us very competitive on the global stage, and I think that's important. Why? Multinationals that are coming into Canada, they want to set up a beachhead to attack the North American marketplace. Having a 25% effective tax rate compared to higher rates, and especially the United States, means that corporations will be incented to come to Canada to set up shop, deliver value, and in fact be taxed in Canada. Secondly, Canadian corporations that are doing business here and around the globe. A low effective corporate income tax rate means they have more money after tax to invest in things like growth initiatives, productivity, or even things such as wages. So a 25% Canadian effective rate for large corporations is something that's very desirable, very important for our competitiveness, and something that Minister Flaherty has to continue to push for that journey. Second on the wish list, I'd love to see the federal government and try to entice the remaining provinces that still have a provincial sales tax into the HST system. Why? HST is much more efficient from a business perspective. It causes less cost for business on its inputs, enabling them to have more money, frankly, to invest in things like wages and productivity. Secondly, when we have different systems in various provinces across the country, it's very difficult for businesses to comply with all those systems, and there's an additional cost borne by business for that. If we get to a system where all of the provinces are on the HST, with the exception of Quebec with its QST, which is quite similar to HST, that would be a system that I think would be very, very beneficial for business, and I'd love to see the federal government try to entice these remaining three provinces to get to that point and actually implement an HST. Quite political, I know, but it's something we should be striving for. Third level I love to see addressed in this particular budget relates to personal income taxes. And I'm not talking about the high level of personal income tax or the highest rate in Canada, because frankly, it's high, but that's a cost of being Canadian. What I am talking about is the second level of taxation, which starts in Canada at around $83,000 and goes to about $120,000. Why is that important? Lots of skilled laborers, lots of professionals fit right into that particular income band. And in Canada, the tax rate starting at $83,000 is at about 40%. That's very high, especially compared to our neighbors down south. If we could actually extend that second level of taxation to start at $120,000 and end at $200,000, that would really reduce the burden on that band of income, $83,000 to $120,000, for many, many Canadians, many that are very prized, very skilled laborers, etc. Why is that important? A number of reasons. First of all, for Canadians that are hardworking, very involved with the economy and driving the economy forward, it would enable that entire class to have more money after tax for things like debt reduction. Economists are talking about the fact that Canadians are incurring increasing amounts of debt, highest level ever, and it would be nice for families to have more money after tax to be able to fund debt obligations or use it for something else. Secondly, if we want to attract real important skilled laborers to help fuel our economy, they typically fit right into that particular income band. And for us, being competitive at that level of income is important to make sure that we entice and attract the best skilled laborers from around the world into our country and into our economy. Third, I think it'll help reduce the brain drain, especially to the United States. The United States income tax level at that level of income at around $85,000 is 30% compared to our 40%. That's a big delta. That's a big difference. And if we could get our rates down at that level, a little bit more competitive, I think more of our skilled laborers and professionals would stay in Canada to help fuel our economy. Fourth on the wish list, I'd love to see Canada come up with a corporate loss transfer system. We did a study, 2011 taxation of corporate groups, that we just recently completed, and the majority of respondents wanted to see something happen with respect to loss transfer within the country. And 84% of those people that responded thought it should be a medium to high priority for the government to try and tackle. Right now in our current system, we tax in Canada corporations on an entity-by-entity basis. What does that mean? If you've got losses in one entity and income in another entity, you can't easily offset them. Yes, we can go through reorganizations and we can try to transfer income into the loss company or transfer losses way to the other side, but frankly, it's cumbersome and unnecessary. Most other countries around the world either have a consolidated system where you look at all of the entities within a corporation in order to determine what the overall taxation should be, or a system where you can transfer losses from one entity to another entity on a very simplified basis. The government is looking at this right now, and I'd love to see in this budget some real, tangible progress in making that a reality in this particular country. Finally, I'd love to see a change to the research and development tax credit system here in Canada. It's a good system, and it's the primary way that the Canadian government finances research and development in Canada for corporations. Works very, very well for small corporations that are privately held because they earn investment tax credits on qualified expenditures in research and experimental development, and they get a refund of those investment tax credits regardless of whether or not they're taxable. They actually get money back from the government. I'd like to see that extended for large corporations so that large corporations that are spending money on qualified research and development actually get an investment tax credit that is cashable on their terms instead of having to wait to apply it against income tax otherwise payable. Many corporations, as they're going through the development cycle, in fact, aren't taxable. They don't pay cash tax, so the benefit of that investment tax credit isn't realized until some time later in the future, if at all, when they become taxable. If we truly want Canadian companies to innovate and increase productivity within Canada, it would be nice to see that investment tax credits be fully refundable for all corporations in Canada, not just the small privately held ones. Look, I realize that my wish list for the government can't occur overnight. We do live in tough economic times. There's a significant deficit. We all realize that. But to the extent that this particular budget can address some of the 5 issues that I talked about today, I think it would be better for Canada and Canadians overall. Stay tuned for more information on the budget from KPMG. We'll actually be having a webcast on March 22nd, the date of the budget, and there'll be more opportunities for us to keep you up to date as to how the budget will affect you and your business. And I'd like to thank you very much for your attention today. Thank you.